Good morning, good morning, good morning, and hello, it's me, Kenny Polcari, your host of the party. And today is Thursday, October 7th, 2021. And here I am. And we're going to talk about what's happening in the markets, what happened yesterday, and what's going on today after Congress came together and just kicked the can down the road again, right? The circus never ceases to entertain us or amaze me, right? As elected officials appear to be at the table, the debt ceiling crisis averted for now, because all they did was kick the can down the road. Global stocks globally are surging this morning. 10-year treasuries are settling down. Oil backs off just a bit. And what are we having for dinner tonight? We're going to have the eggs in purgatory. It is a classic Sicilian dish. Look, stocks continued to get clobbered yesterday morning, even after the 8:30 a.m. ADP employment report beat all the estimates, right? As I had suspected, and I said that to you yesterday. New jobs coming in at plus 568,000 versus the estimate of plus 430. Yet no one paid any attention to that because they were all focused on the circus in D.C. Then, the day went on, and then finally the news hit the tape at about 3 p.m., although the rumors started earlier. And somehow the GOP and the DNC would come together to announce that they would suspend debt ceiling, sending stocks higher. So I'd say, wow, look at that. Elected officials are going to raise the debt ceiling, or at least suspend it. So who would have thought that was even possible, right? And the algos loved it. Stocks went positive. Imagine that. Stocks went positive after they created all this angst. Stocks suddenly raised their head. The algo shifted from sell mode to buy mode when the rumor on the street was that Mitchie McConnell was prepared to offer an olive branch. This, after the president, Treasury Secretary Janet Yellen held a contrived, desperate powwow type of meeting with Jane Fraser, the CEO at Citibank, Adina Friedman, the president of NASDAQ, along with a couple of others who sat there and pled with lawmakers to raise the debt ceiling to avoid a catastrophe. Both of the leaders telling the audience that the markets had become anxious and concerned that if the debt ceiling was not raised right now, the country risked going down the drain, hook, line, and sinker. Honestly, it was tough to watch. Both blaming the recent turmoil in the markets on whether or not elected officials could come to an agreement to extend or raise the debt ceiling. And then the president, Joey, had the audacity to say, and I quote, "Failure to raise the debt ceiling would wipe out the retirement savings of millions of Americans." Now make sure you heard that. He used the words wipe out, as if gone, poof, it's gone, nothing left. Janet then warning us that if we failed to raise the ceiling, it would be disastrous. It would be a catastrophe. And that Americans should fully expect a recession if that happens. I mean, can you think of more inflammatory language? So to that, I got to say, you're kidding me. Talk about creating hysteria and havoc. Just to be clear, a failure to raise the debt ceiling would not wipe out your retirement savings. Why? Because there was never any real threat that the ceiling would not be raised. Never, none, zero. Remember, they attempted to fail to raise the debt ceiling during the Obama administration until the 11th hour. And how'd that work out? Well, during September of 2012, when the fight was on and they created all kinds of angst, the markets fell by 3%. Then they passed it in the 11th hour after creating the drama. The market stabilized before it actually fell another 8% into mid-November. And then it rallied back 5% into the year end. Hardly a disaster, hardly a catastrophe. This year, we've seen the market do what? Well, when this argument started in mid-September, the S&P was at 43.28. It actually rallied 3.5% to 44.48 by the 27th of September as the fight was brewing, only to fall by 3.5% to 43.25 as of yesterday as the Dems tried to create hysteria. So tell me, where's the collapse in equities? Where is this wipeout? Exactly, there isn't one, because there was never really a threat of them not doing something, whether it was to suspend the ceiling or raise the ceiling. There wasn't a shot that they weren't going to do anything. And that was just proven true by the latest olive branch. But that's not to say that the market's not a bit anxious. It is. But the issues that will cause the market to become more anxious and unsettled are not the debt ceiling. Think it's a global economic slowdown. It's a U.S. slowdown. It's massive tech tax and spend policies. It's rising interest rates. It's rising inflation. How about slowing profit growth? How about a change in monetary policy that still remains unclear? And 1970-style stagflation, which people are starting to discuss. And we haven't even discussed China and Taiwan yet. Notice I didn't even mention the debt ceiling, COVID-19, or Evergrande in any of those concerns. By the end of the day, stocks ended mostly in the plus column, right? The Dow added 103 points, the S&P's up 8, NASDAQ gained 68, the Russell ended the day down 18 points, which is interesting, while the Trends was added 85 points. All this because the Republicans are going to offer the Democrats a way out of the debt limit impasse at least until December of 2021, bringing some short-term relief to just one of the macro risks on both the front and back burners. In the end, all they did was kick the can down the road. But that's a whole nother story, right? Something we could talk about on another day for a whole session. But it was an exhausting day, right? As we all sat on the edge of our seats with our popcorn in hand, watching the drama play out across all the cable news stations. I guess you could say we dodged another bullet, at least for now. Because if they have only suspended it until December, the issue still hangs in the balance, and we haven't heard the last of it. So I'm just saying, remember, it ain't over until the fat lady sings, right? Think the opera. Think that big woman that comes out at the end. Anyway, the 10-year Treasury yield ended the day at 1.52%, not far from where it started the day. The dollar index ended the day at 94.21 after trading as high as 94.47 and as low as 94.21. Oil fell at $1.87 and ended the day at 77.06, while the VIX was whipped around, trading as high as 24.40, as low as 21.17. This morning, global markets are all higher, right? Japan's up 0.5%, Hong Kong up 3%, Australia up 0.7%, South Korea up 1.8%, Taiwan up 2%. China remains closed for the holidays. Tencent in Hong Kong, Tencent was up 5.6%. Alibaba up 7.8%. Both names that have gotten crushed recently. China Estates up 32% after they announced that they are going private. In Europe, stocks and markets there are also racing higher. Investors there reacting to the news that DC is at least kicking the can down the road, as well as the fact that after that announcement, 10-year treasuries retreated from the highs on Wednesday, right? There's no economic data across Europe really to drive the action today, so the seesaw continues. At 6 a.m., markets across that region are all up between 1 and 1.7% or so, right? And this morning, U.S. futures are joining in the fun as well. Dow futures up 200 points. The S&P's up 30. The Nasdaq's up 145. The Russell's up 12 points. The fun being explained away by easing debt ceiling concerns. Look, so many trader types are going to go on this shopping spree today as they scoop up some of the better names. Think large cap ATM-like names. Think growth names that have come under pressure. As some asset managers chose to raise cash in expectation of demand withdrawals due to the nervousness and some year-end planning, right? So names like Apple and Amazon, which are big ATM-like market cap names, came under pressure. Expect those to rally. I do not expect the recent volatility, though, to subside anytime soon. I still think that we're going to have some volatility and turbulence in the weeks ahead. Friday brings us the all-important non-farm payroll report where it's expected we're going to see plus 500,000 new jobs. The unemployment rate set to fall to 5.1%, down from 5.2%. Average hourly earnings year over year expected to be up 4.6%. Next week starts the third quarter earnings, and the jury is still out on what that's going to look like. Yes, estimates are positive. Growth is expected to be strong, though not as strong as the second quarter, but that's not a surprise. The devil will be in the details, future guidance, input prices, rising dollars, supply chain issues, and how future Fed policy may help or harm any of these projections. So stay close to your desks, right? Because it ain't over yet. Eco data today includes initial jobless claims, expectations of 348, and continuing claims of 2.7 million. Bitcoin popped yesterday and is now trading at $54,000, while Ethereum is trading above 3,500. Right? This is up last week. Ethereum was trading at the 2,800 level. The S&P ended the day yesterday at 43.63 after testing as low as 42.90 at 10 a.m. and then tested that at 10 a.m. in the morning. And then during the day, it churned as the speculation grew that Congress is going to come to a deal before the end of the day. 43.63 is now above the trend line, which was acting as resistance, but is now once again support. Today's going to be key to watch. Will we move significantly higher or just churn right here? Futures action and European moves suggest that we could see a 1.25 to 1.5% pop in the indexes across the board today, of which nobody should be surprised. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it, put it right into your phone. You send me off an email, text, even give me a call. I'm always happy to engage and talk markets, planning, thoughts, concerns, ideas, policy, anything you want to talk about. You can also follow me on Twitter or TikTok at Kenny Polcari and on Instagram at KennyP1961. So what are we having for dinner tonight? This is kind of interesting. This is a classic Sicilian dish. It's called eggs in purgatory, or in Italian, it's called uova in purgatorio. It's a classic Sicilian dish, right? Simple to make, not complicated, nothing that you'll find in a restaurant. It's something you'll find at grandma's house, right? So you need fresh marinara sauce, the basic, right? So you need olive oil, onions, garlic, plum tomatoes, fresh basil, salt and pepper, a pinch of sugar, shredded carrot, shredded celery, right? Saute the garlic and then add the chopped diced onions like we did yesterday. Cook it for about 15 minutes or so. Now add the shredded carrots and the celery, right? Probably 1 carrot, 1 stalk of celery. Saute for another 10 minutes, let it all get soft. Now add in the crushed plum tomatoes, not puree. Season with salt and pepper, fresh basil, a pinch of sugar. Remember, I told you my grandmother did it. Bring it to a boil, then turn it down to simmer. Cover and let it simmer for 30 minutes or so. It's just a very basic marinara, right? You can add the carrots and celery if you want. I always do. If you don't want to, you don't have to. Now, you need a loaf of fresh Italian bread, and you need a dozen jumbo eggs, because this is where it gets interesting. After you make the marinara, transfer some of the marinara sauce into another shallow frying pan. Turn the heat to medium, get it nice and hot, and now crack the egg into the tomato sauce. Don't break it. Leave it like you're going to make a fried egg, right? Leave the yolk whole. With a spoon, take the hot sauce and spoon it over the egg so that it cooks, right? You don't want to cook it so much that the yolk gets hard, though. You still want the yolk to be soft, right? You just want the clear to turn white. Once you've done that, now put it on the plate, take the egg out, put it on the plate, take the spoon, put some more marinara sauce on top of the egg, and then take a piece of that great Italian bread, right? The pane di casa is like the basic Italian bread. It's so delicious. Take that, don't toast it. Take it so it's fresh, right? And then break your egg and mix it. You can eat your egg with the tomato sauce, but use the bread to soak up the sauce and soak up the egg and eat it. It's delicious. You can have that for lunch. You can have that for dinner. I know it's eggs. I'm not so sure you can have it for breakfast. I will say I've never had it for breakfast, but for lunch and dinner for sure. But listen, you come home from a long night, maybe you have it for breakfast. Who knows? In any event, look, the sun just came up while I was giving this speech, and so therefore now the day has started. It's going to be another beautiful day down here in South Florida. In any event, until I see you tomorrow, take good care.